Get our promised conversation with the management of Lemon Tree Hotels. Patanjali Keswani joins in now from the sidelines of the Motilal Oswal conference. Thanks a lot, Mr. Keswani, for joining in. Always a pleasure speaking with you. The first quarter obviously was understandably impacted by seasonal weakness, the ramp-up of Mumbai Aurika, and at the same time you had set aside some expenses for renovation of your portfolio. So just wanted a status check on all these three factors itself. Have you seen some recovery in occupancy in the second quarter? What does Mumbai Aurika stand at now in terms of occupancy, and how many more months before the portfolio is renovated? What's the prognosis here?
So Q2 will be somewhat better than Q1 in both occupancy and certainly in ARR. Aurika, well, whether it is Q1 or Q2, it's off-season. It'll take a little more time, but in H2, as I have said earlier, it will pick up to where we hope it'll stabilize at. As far as renovation goes, we are doing the maximum renovation in H1 of this year and H1 of next year. Our main focus is the high-value Lemon Tree premieres, which have not been renovated for some years, till before COVID, and the full portfolio of keys. So broadly, if you ask me, Q2 will be better than Q1, quite significantly in fact. H2 will be much better than H1. And with the renovation of this portfolio, well, I think we will be positioned and reimagined as a completely new hotel company by the end of next year.
Okay. So when you say Q2 will be better, occupancy as a whole was 66.6% in Q1. Average room rate was around 5,686. It was up around 9 odd percent. Give us a ballpark in terms of what the incremental growth could be Q on Q.
Well, as I said, it will be better. I don't want to give a ballpark. All I'm saying is it will be much better than Q1 in terms of EBITDA and in terms of profitability, and this will continue into Q3 and even more into Q4. But very specific guidance I would prefer not to give.
Okay, take that point. On the Mumbai Aurika itself, you said that H2 will stabilize at levels where you expect it to be in the long term. So wanted, what is your long-term objective for the Mumbai Aurika? And on your renovated rooms, I wanted, a sense of the economics. How do they play out? Say for every 1% expenditure that you do on renovation of rooms, how much higher can the ARRs and, the concomitant impact on your EBITDA be?
So our broad perspective is that the incremental expenditure we are doing on renovation, which will be roughly 100 crores a year for this year and the following year, we would expect a payback within 2 years. So if we spend, say, 100 crores this year, I would like us to see an incremental EBITDA beyond what we would have normally done of 50 crores more every year after that. So 200 crores means effectively what I'm saying is that I would like to see a 100 crore improvement in EBITDA annually once this renovation occurs. Now, as far as Aurika Bombay goes, which is your first question, see, Aurika Bombay is a very, very large hotel. When I look back at the first hotel we built in Bombay, which was a 300-room hotel, it took 7 months for it to hit a 75% occupancy. And then today, I think today it is at 90% occupancy at about 7,500 rupees in summer. I would like Aurika to hit 70% in H2. But as I said, it's 670 rooms. So really it will take a year, which means I would reckon that by next winter it should be at 80-85%. But this winter we should be north of 70%. And that's what I hope we will achieve.
Okay. All right. We've completely run out of time, and I'm sure you have a busy schedule at the Motilal conference as well, Mr. Keswani. We're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is Lemon Tree joining in from the sidelines of the 20th Motilal Oswal Annual Global Investor Conference. On that note, we're wrapping up on Halftime Report. Business Lunch up next.